Bristol-Myers Squibb has taken a bit of a dump over the last few days, down over 8% all of a sudden after posting a big financial hit. Welcome to the Fiscal Philosophy YouTube channel. I don't currently have any shares of Bristol-Myers Squibb, but the stock has garnered more interest from people that follow me on Twitter as well as on my Discord. By the way, you should follow me on both. Links will be in the description of the video. As some would say, generally speaking, you would rather buy a stock when it's cheaper versus when it's more expensive, or as some like to put it, buy low, sell high, right? Now, in the case of BMY, I would be asking myself, okay, why has this stock fallen? Is the financial position they're in actually worse to the point where it justifies it? And where do I think it's going from here? In this case, what they've announced is charges relating to several acquisitions that they made. And, if you've ever, kind of listened to my take on acquisitions, if they're good, they can really make a big difference for a business. But if they're poor and just kind of making acquisitions to make acquisitions, it can end up backfiring in a big way. I'm thinking of like Altria and their acquisition of their stake in Juul, it was just a huge blunder. Now, I don't know if this is a blunder quite to that degree, but they did have charges related to these acquisitions. And as a result, they have sort of slashed their forward-looking earnings forecasts. So they're expecting to not have as nice of earnings going forward for at least a bit here. And they've announced layoffs, massive layoffs, in order to cut costs. So those are not signs of prosperity within the business of Bristol-Myers Squibb. Now, this is a healthcare company, a pharmaceutical company. Certainly, I don't think that this is going away or going anywhere anytime soon. The question is, though, has this created a value opportunity, or did the price just sort of correct for the new information? And is this, more or less efficiently priced now? This latest price slump has probably put it on the radar of a lot of dividend-focused investors, because now not only is the dividend yield above 5%, but when you combine that with the buyback, it's now achieving a total shareholder yield of about 9%, which is quite high and very appealing for, dividend growth-oriented investors. While I can see how on the surface that makes sense, I think it's also important to look at how these latest charges have maybe impacted the financials of Bristol-Myers Squibb and really think about what the future looks like, because whether or not it's a good investment today depends on what you believe about the future, not about the past. Now, if this was an ADM-like situation and it was just a perception thing, I'd probably be giving it a much, much more consideration, right? But when you look at, for example, debt, what happened here in the most recent quarter, and I'm pretty sure it is related to these charges, they've gone from about $36.5 billion in long-term debt up to $49.5 billion. So long-term debt jumped by a third, and this is in a, of course, higher interest rate environment that we're in right now. So this interest cost on this debt is certainly going to be a drag on the business for probably a good amount of time. And, you don't really want to see that. If I was a shareholder, I would probably be pretty livid right now, actually, about this. So you might be saying, hey, it's not necessarily just about the debt. What about the future earnings? Isn't the future what matters most? And normally I would agree. So here's analyst estimates going forward. The problem I have here is I think they probably haven't had time to adjust all of these with the new information. The projections are likely showing what analysts were projecting before this new information came out. But even with these projections, okay, 2024 will be $6.90. 2028, if you believe that, will be $7.10. That's pretty flat on the growth. All right. Maybe call it like 2% or something. Maybe keeps up with inflation if we're lucky at best on these expectations. And then even if you give credit for that and apply a DCF, it's like, okay, so maybe it's worth $50 if it's about as good as they thought it was going to be. When with this new information, this new debt burden, etc., the increased interest cost, the lack of profitability in these acquisitions, which maybe analysts were expecting more from these acquisitions, it's very possible that it's going to be substantially worse than this, right? And in that scenario, what value are we getting? The concept of buy the dip, in my view, applies when the dip is maybe in a pricing inefficiency, right? It's disconnected from like the actual reality of the business. I think ADM is probably a pretty good example of that, where their like accounting issue ended up being, really a rather minimal impact on the bottom line, and therefore the giant price drop that they had created a temporary pricing inefficiency, right? In this case, I think that the price drop may more or less be justified. On the other hand, maybe you've got a background in biology or chemistry, or you work in the medical field, and maybe you've got a particular level of competency and you've got confidence in something in their pipeline is going to be an absolute banger in the next couple years. And maybe you say, hey, the stock just dropped, but they've got this drug coming through that's going to just absolutely revolutionize treatment of X, Y, or Z disease. There's going to be tens of millions of people treated with it. It's going to be great. If you know that, or you're confident in that, maybe this does represent an opportunity. But I won't sit here and misrepresent myself as someone that can say that with any degree of confidence. Their pipeline has a lot of drugs in it. And yes, it's true. Maybe one of them, or more than one of them, is going to be a smash hit and absolutely be the go-to treatment for some really widespread ailment for millions upon millions of people. If you are that person that understands pipelines and the science, and you can say with confidence that a drug has a lot of potential value, that probably gives you an edge over someone like me that just has to look at the boring financial numbers and say, it seems like maybe management isn't allocating capital all that wisely. But you, understanding the pipeline, can say, no, this drug, a lot of potential. I read the results of the clinical trials. It looks really encouraging. I'm going to take a shot on here. If you're one of those individuals that can identify those opportunities, more power to you. I myself personally, I have to just stick with the financials here and say, for me, this is a pass at the moment. I don't think that it's actually really that much of a mispricing, if at all, based on what I can tell. So that's where I'm standing with Bristol-Myers Squibb at the moment. Be sure to let us know in the comments below if you believe that this is actually a mispricing and a good opportunity to pick up stock in BMY. Now, make sure you also like the video for the algorithm, subscribe to the channel for more, follow me on X at Mr. Macho Mog, join the Discord, link in the description, and watch every Saturday at 8 p.m. Eastern. Cashflow Kings Live, link in the description there as well. Take it easy, everyone. Have a wonderful weekend.